Hello and welcome to Trade Talks. A power-packed week surrounded with a rising debate over the rate cuts among the Fed members, stranded trade war negotiations, and rising geopolitical risk. Could this be any more dramatic? The Fed in the past week cut interest rates for the second time in 2 months, but the latest forecast of Fed officials showed just how divided they are on the need for future rate cuts. 5 wanted deeper cuts, 5 didn't want any cuts, and another 7 were happy with the Fed's action. US stocks fought their way back into the positive territory following the Federal Reserve decision to cut interest rates as investors digested remarks from Jay Powell and a more hawkish outlook than anticipated. Where Jay Powell and team was trying so hard to make America great again, India's government also escalated efforts to repair economic growth with a surprise $20 billion tax cut, taking the rate for companies to one of the lowest in Asia. The Indian S&P BSE Sensex index jumps 5.3% to notch its biggest one-day gain since May 5, 2009 when it soared 17.3%. The lower corporate tax rate comes as the Indian government tries to reignite India's economy. India's GDP growth rate has fallen for 6 straight quarters through the first half of 2019. At the end of the first quarter of 2018, the Indian economy was growing at an 8.1% rate. That growth rate has since fallen to 5% through the second quarter of this year. So what's next? Well, the trade war for one, which everyone was so looking forward to, has updated its Facebook status to "It's complicated." Reports on Friday that Chinese agriculture officials cancelled visits to farms in Montana and Nebraska sent stocks lower. For fear, it signaled that talks were not making any progress. At this point, it's evident that trade developments could continue to cause volatility in markets. While the global markets wait curiously for an end to trade war, Federal Reserve members seemed to steal the spotlight on Friday after St. Louis Fed President James Bullard warned that Fed should not ignore market signals on a potential recession. My advice to the investors? Keep a close watch on the 3 voices of Fed: recession, bubbles, and in a good place. A divided Fed can create more fluctuations in US dollar, gold, and US equities in the coming months. The rising tensions with Iran over the attack on Saudi Aramco should also continue to dominate headlines as the United Nations General Assembly meets in New York. So investors, do not shy to diversify. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to this channel. To register for the seminars in the month of September, click on www.century.ae. My name is Yogesh and you have a great weekend.